And these are, like I said, this list is absolutely not exclusive. These are the big, we're gonna hit the main points here on these types of income. We're gonna talk about interest, dividends, tax refunds, and remember those are income tax, state income tax refunds, not federal income tax refunds, really. And Social Security benefits. You are gonna love this calculation. You're just gonna eat this up. You're gonna be very happy that the software actually does the calculation, but you are gonna do it for our purposes here. All right, so interest income. So interest, we all know what interest is, right? It's you're getting paid for the privilege of lending your money to the bank. It could be a bank, could be another individual as well. So if you, for example, if you lend your child money to purchase a house, essentially a mortgage, like a private mortgage, and they pay you and they're paying you interest on that, that's still interest income and would be included here. And that's the creditor debtor arrangement there that they talk about. These other ones, like I said, I'm not sure I'm going to cover that or not, those below market rate loans and all of that. Shareholder loans, there's all sorts of complicated stuff there. What we mainly want to focus on is the usual types of interest here. So interest on savings bonds, as I had mentioned, some savings bonds it's probably really not that loud in there, but
I think the walls are thin, or just
walls are super
or the speaker's
thin.
just like right there on the other side.
I don't know. Anyway, I'm sorry. Hopefully you can focus. It distracts me. As we had mentioned here, that some of these bonds you can elect to claim the interest income as you go, or you can do it all at once at the end of the year on an accrual basis. Here they've got an example. Alina, she purchased a $1,000 face value series EE US savings bond. So the EEs work a little different than the I bonds. I bonds, you buy them for the face value and they increase in value, whereas the EE bonds, you buy it and at some point in the future, they promise that it's going to be worth what you pay half of what the face value is, and then it goes up to that value. But anyway, bond earned interest rate is 6% throughout 2023. Year end, the bond had a face value of $530. So she bought it for $500. It's earned $30 of interest. She could choose to claim that $30 of interest on her tax return now, and then she doesn't have to when she redeems the bond. If she does she has to do it that way every year. So she can't just claim $30 now and then, I'll wait for the rest of it. You got to claim that interest every single year if you're going to choose the accrual method. We also have tax exempted interest. This is one of those categories then of specifically exempt from tax. One big category of tax exempt interest are from what we call municipal bonds. So muni bonds, municipal bonds. These are a popular investment vehicle, especially for retirees, because the interest that they earn is not subject to federal taxation, and in most cases not subject to state taxation either if they meet certain criteria. So this is interest on bonds that's issued by any state, any possession of the U.S., so that means Guam, Puerto Rico, those places, Virgin Islands, any political subdivision, so state or local, county, or the District of Columbia. Interest is taxable, though, if it's received from state or local bonds issued for private activities. So for example, you know, big cities that raise money for stadiums, like NFL stadiums, they'll issue a bond to pay for the building of the stadium. That would not be considered a tax exempt municipal bond. So it's gotta be for general, like school bonds and things like that. It's gotta be for the general, let's see. I wanna see if I wanna come back to this or do this now. Oh my goodness. No, I guess I wanna do that now. So this is the 1099 INT form where interest is reported. So the payer, the bank, whoever is paying the interest, their information's up here, recipient down here, excuse me. Interest income, this would be taxable interest income listed here. If it's tax exempt income or interest, it's either going to be, so if it's specifically US savings bonds and treasury obligations, it's gonna be listed here on box 3. Tax exempt interest, so like municipal bonds would be listed in box 8. But all different types of interest are reported on this INT form, 1099 INT. So some things to note. Now, interest is reported on what's called the Schedule B, but not all interest has to be reported on it. It doesn't always have to be used. We'll go through the requirements for using this form. But all the different payers would be listed here, and then the amounts over here. There's also a spot for dividends, and we'll talk about dividends here in a minute. And then there's this section of questions regarding foreign accounts and trusts. The IRS wants information on any foreign assets or foreign bank accounts that Americans have, because it's not uncommon for individuals to have accounts overseas but then not report that income. So there are some pretty hefty penalties for not reporting that income. So they have this section here where you have to answer it, and these have to be answered yes or no. So that if they find out that it should have been answered yes and you answered it no, then you're gonna be in trouble. So that's what this bottom form is for, or the bottom part of this form is for. But the income is actually reported up here. So even if it was foreign source income and you reported yes down here and it was foreign interest, that would be listed up here under all of the interest items. So as I said, we don't always use this form, this Schedule B, but we have to use it if any of the following applies. If there was more than $1,500 of interest income for the year, more than $1,500 of interest income in total for the year, regardless of the source. If the individual received any seller financed mortgage interest, that example where it's a private mortgage, then they've got to file this form or this Schedule B. If they received tax exempt interest in any amount, so even if it's just a few bucks and there's tax exempt interest, you've got to use the Schedule B and report it on there. If they received interest as a nominee, this is kind of a strange concept, but sometimes what happens is more than one person owns an asset that is where interest is being paid. So let's say you and your mom have a bank account together, and that bank account earned interest, but it's only reported under one social security number. But you both share that interest. So you earned $2,000 of interest, your mom got $1,000, you got $1,000. Well, it's not really fair that your mom paid tax on all $2,000 just because it's under her social security number. So if you are a nominee, it means that it was reported under a different social security number. So you should, mostly for shared assets like that. If that happens, you have to fill out Schedule B. If you claimed an exclusion for interest on Series EE savings bonds issued after 1989 or Series I bonds, this is for educational purposes, and we will talk about that a little bit in the appendix to this chapter. Any adjustments for accrued interest, amortizable bond premium, original issue, discount, so that again is part of the appendix. if you had a foreign account, received a distribution from, or was the grantor of or transfer of a foreign trust. So that goes back to that foreign account question. So everything is listed on there if you meet the requirements that you have to do that. And there's certain interest here, excludable interest, but all that's here. And then line 3, add the amounts. And then this is entered, it's all transferred over to the form 1040 on line 10B. I'll come back to the dividends in a minute. And then, like I said, this is the form. Oh, the other thing this will come into play in chapter 4, the early withdrawal penalty, because there is an adjustment for an early withdrawal penalty, but just kind of a little preview there of that. Go past that. Yeah, so if you receive interest from a source where you didn't receive a 1099, so that mortgage example, like it's a private mortgage, and you didn't get a 1099, then you list it separately yourself as the interest income. So payments received from seller finance mortgages, installment sales, imputed interest, that sort of thing. So some sort of, you didn't get a 1099, but you did receive interest, you still report it on that Schedule B. All right. That's interest income.